Hi, welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, April 28th. Today, as usual, we're going to take a look at the broader markets and do a deep dive to really give you a sense of where we are, not only near term, but intermediate and longer term as well. From there, we will go ahead. Actually, initially, I'll share with you some of those really impactful headline news that drove price action this week. And then last up, viewer question of the week. And it's all about how one can take advantage of this move into housing stocks. And I'll talk about related stocks relative to that housing market. So from here, let's take a look at some of that data that drove the price action this week. First up is the fact that consumer confidence drops to a 9-year low. Not overly impactful, but just really input for the bigger picture that the economy is generally slowing. Consumers are fearful of this high inflation. We did see durable goods orders slow, and that is also showing that business investments are falling. So another signal that the economy could be slowing down. First quarter GDP also showed that the economy is slowing. So net, we are getting signals, not pronounced, but certainly that we could be in the beginning stages of a slowdown in the economy. We also did get core PCE data on Friday, and that's a very closely watched inflation metric for the Federal Reserve. It did come in just a little, but that core number remains very high, elevated. It's being viewed as sticky. So that brought a little bit of uncertainty to the markets relative to the Federal Reserve's policy relating to trying to keep inflation low by raising interest rates. And next week, we will certainly get news relative to that. The Federal Reserve on Wednesday will be announcing their rate hike decision. And then also Fed Chair Powell will be speaking. And from there, we can potentially get information relating to his monetary policy. And also, we will see April employment data on Wednesday with private employment and Friday more general employment data. This is also going to be closely watched relative to whether we can see a drawdown or unemployment increase, which is what the Federal Reserve is on the prowl for, to signal potential slowing of the economy and then lower inflation. So let's go ahead and take a look. Where did the markets close for the week? And here we are with a daily price chart of the S&P 500. One item that I did not put up there as a headline, but certainly the biggest driver for price action this week were earnings reports from several mega cap FANG stocks that helped drive the markets higher. And I will share that with you as we move forward. But first up, on the broader markets, we can see that the S&P 500 has regained a presence above this 10-day simple moving average. Nice high volume on that rally. And then also in turn, that did push the RSI, relative strength indicator, back into positive territory. And then also the stochastics up there now in positive territory above that net neutral 50. So the near-term uptrend is back in place for the S&P 500. Now from here, I did want to alert you to a couple of levels that are key. First up is this 4,200 area. This is your area of upside resistance. We did break through above that briefly here in July, a failed move above it here in February. And then more recently, we do appear to be moving toward that. We would like to see a pronounced or a more lengthy move and trading above that 4,200 level to signal that a near-term uptrend, a sustainable one, is on the way. So from here, I do want to share with you a weekly chart of the S&P 500, a little bit of a longer view. And with this view, we can see that the momentum is positive on the weekly for the S&P with the MACD and that RSI and the indice above this 10-week moving average. It's not overly robust, but it does present a positive picture for the intermediate term of the broader markets, the prospects there. So from here, let's go ahead and take a look at the 11 underlying sectors within the broader markets. We're on the lookout for where that relative strength, that outperformance is shaping up so that you can, of course, take advantage of that. First up here is consumer staples, and this is a 2-month daily price chart view of the 11 sectors, the stronger sectors up here in the forefront, and then weaker ones down in this lower right quartile. So here we are with consumer staples, and it's really been just an outperformer, a lot of it having to do with growth and earnings, in addition to that defensive nature and higher yield that these stocks offer. The ones that are faring the best are companies that are also continuing to grow despite inflation. From here, we can take a look at communication services with this gap up, all about strong earnings from Meta platform, which is a heavy holding in this group. Nice continuation rally in this communication services area. And then also, as we move forward, taking a look at real estate, REIT stocks on the move. They're not quite positive yet, but it was among the top performing sectors last week. We can see it does still have work to do relative to breaking into a new uptrend. It would need to get up above that 200-day simple moving average. Also of note is the fact that healthcare was an underperformer, but it did at the last moment here regain its uptrend by closing just above that 10-day moving average, and then your outside momentum is still positive. I'll share with you in our next segment a really strong area in the healthcare space. Now, as we move forward toward these less performing areas, I did want to highlight the fact that the industrial sector, which has been struggling here since this March high, did have a nice rally over the last 2 days, and that's all about earnings. I'll share with you a company that is faring well, but a number of these industrials, it will tie in with that viewer question relating to housing and construction in general. Those companies are coming in with strong numbers and helping support the move into industrials. So from here, let's go ahead and take a look at some of the sub-industry groupings beneath those sectors or within those sectors. And again, a 2-month daily price chart view, strength to weakness. And up here at the forefront is IHI. This is the medical devices ETF. And this particular area is in healthcare, but it is that growth component of healthcare. And it's a really sweet spot right now in the sense that you get that more defensive backdrop with the healthcare space. But a number of the stocks that are outperforming here are exhibiting growth. They're coming in with good numbers. And I will share a stock from this group as we move forward as well. So moving along, taking a look at some of these other areas I did not mention, but technology was up 1.7% last week. Let's go ahead and back and take a look. I think that bears a closer look. It is the largest percentage portion of the broader markets, so you will want to be on top of that. In fact, I will quite simply come over to this view for that XLK. And I did want to share with you what took place last week. Again, a late week rally. We can see that it pulled back to that 50-day simple moving average, rather ominous going into the latter part of the week. However, the tech sector did have a nice move with the momentum still in positive territory. A lot of that having to do with Microsoft, very heavyweight, and Apple also well outperformed, and they're due to report their earnings next week. And here we are back at the industry group level, and I did want to share with you a couple of other developments here within the markets. We can see that banking stocks are continuing to struggle. This is KRE. There was negative news earlier in the week. A large West Coast bank did see deposits decline very significantly in the release of their earnings, and that did bring the banking crisis fears back to the forefront. So this is a group that is continuing to struggle. And then also we can take a look at retail, which is also continuing to struggle as well. We can see this move down here into negative territory as the momentum shift is also in negative territory as well. We talked about consumer confidence suffering, and that is hitting select areas of retail. I did want to go ahead and share with you one of the better known housing stocks. This is D.R. Horton, DHI, reported earnings last week, gap up into a nice uptrend. And by the way, this is a very attractive chart. The stock does appear poised to trade higher from here. And we can also take a look at a couple of other smaller housing stocks that reported earnings this week and had very big moves subsequent due to strong results. This is Beazer Homes, BZH, and take a look, 24% rally after reporting strong numbers. Another small cap name that reported this week is Taylor Morrison Homes. This is what we are seeing pretty much throughout the housing industry group, a number of these names reacting positively to strong earnings, still has further upside potential here. I talked about add-on plays to this strong move into housing, and I did want to share with you a couple of smaller names here that are on the move, also in response to earnings. Here's Simpson Manufacturing, SSD, and we can see, I'll mark this stock up because they did report earnings this week. The company is in that construction and building space, and in response to that bullish report, they did have this gap up in price and on very heavy volume, indicating accumulation characteristics, a nice continuation rally from there, and positive momentum. The stock does look very attractive at this time. Another smaller stock, also housing related. They do a lot in the way of heating and air systems. It's ticker symbol FIX. A little bit sloppier, but we can see that the stock had a very significant rally, again, on very high volume here. The item that is of interest to me with this particular stock is the fact that this moving average convergence divergence just entered into positive territory, and it is poised for further upside. We also have positive RSI. Now, we may see the stock fill back and forth as it digests yesterday's big move, but net, it is a very constructive looking chart. Also of note, I did want to share with you a couple of companies that are due to report next week. I did talk about Apple. We do also have a number of semiconductor stocks due to report, AMD among them, MCHP, another one, and Qualcomm. So we have three well-known semiconductor companies that are due to report next week. On the lookout for this semiconductor group to at some point potentially reverse this downtrend. Using this December pullback as precedent, we will need to see the group SOXX break back above these moving averages with positive momentum, all depending potentially on these earnings and other reports. That's it for this week. Everyone have a fantastic weekend. I'll see you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.